But to me, when gold's at 5,000 and 10,000, and it will be, as Egon and I always say, be careful what you ask for because everything else is going to be so much more expensive. And that's the key to understanding precious monetary metals. And when gold is in a bull market, silver tends to dramatically outpace in terms of its speed of movement. Really, the gold bull market is just beginning. And as it gets more traction, as it becomes more obvious, then I think silver, in terms of just pure price appreciation, is going to be a massive move. And so I'm highly recommending silver as an allocation, and I'm not alone. The market crash could be worse, but the gold price
Right.
is not going to go down. It's going to go up because the money's not flowing to the
Right.
dollar. It's flowing to gold. It's already pre-flowing, preparing right now.
Financial analyst Matthew Piepenburg highlights a powerful truth. Gold and silver aren't just assets, they're lifeboats in a sinking fiat system. As inflation rages and currencies lose credibility, gold's steady rise and silver's explosive potential reveal a shift toward real value. Silver, still affordable for everyday investors, may offer massive upside as global supply tightens and trust in paper money erodes. Unlike fiat or digital illusions, precious metals endure, indestructible, honest, and immune to manipulation. When currencies falter, gold and silver don't just survive, they lead. If you value financial truth, like, share, and subscribe for more insight.
I have to be very respectful that many listeners here don't have $37,000 or $4,000 to buy an ounce of gold, and they feel like they've missed out. And they're trying to get through the month with mortgages, rent, tuition, or whatever. How can they possibly protect themselves? How can they take advantage of this open destruction of fiat money and protect themselves if gold feels too out of their reach? And to your point, silver, I think, is the ultimate opportunity for those that are struggling to try and find a way to protect themselves right now when gold or an ounce of gold feels too expensive. Look, it's up more than 60% this year. We're not at the 1980 or 2011 gold-silver ratios of 15 and 32, but there is a clear indication that there's a massive supply deficit in this metal. I mean, you've got open pit restrictions in Mexico, et cetera. But
Yes.
the market cap for silver is like literally it's half of Nvidia, for God's sakes. I think it's a $2 trillion market cap. So there is any even measurable increase in demand for silver will send its price up significantly. And it's certainly, you've got guys like David Bateman buying a lot of silver right now. I don't think it's because they're just speculating. They see an opportunity for massive 5x, 6x, 10x price appreciation, but it's a way to protect themselves in a precious metal that's affordable. And I think the fact that you've seen so many shorts on the otherwise dying COMEX or the LBMA
Yeah.
exchange in London, and despite the shorts, silver's knocking at the door of all-time highs. And because of its limited supply and because of its small market cap, I see a massive opportunity for silver. Again, I think it's the most undervalued asset in dollar terms or even priced in gold terms right now. And again, we're seeing huge interest in silver at our desk in Switzerland. It's not by accident. It's not just by desperate speculators. It's by people who see a massive price appreciation, but a precious metal that's actually affordable, especially for the man on the street, which is incredibly important. But I think if you're looking at silver, remember, you've got to have a long-term view. It's not just a speculation asset. It's a monetary metal. You have to hold it with a sense of insurance for dying paper money. And just like gold, you don't want to just trade it for a 2x return. You've got to be patient, as Rick Wool said. Silver rewards infrequently but extravagantly, and silver's position right now for some, so that any massive deleveraging of the US dollar or US treasuries would actually send the dollar up. In other words, it's almost too big to fail. And what's interesting about these conversations with Brent and with Henrik is all of us, including the Bitcoin guys we talk about, we can disagree on the DXY, but ultimately we all agree that gold is the final end game. What Henrik is saying, unlike Brent Johnson, though, he says the last dance for the DXY will happen when there's another market sell-off. If this market ever does mean revert, like in 2008, there'll be a run to safety. There'll be a run to US Treasuries, and there'll be a run to the US dollar. And like in 2008, we could see a massive pullback in the gold price, like 30%, as we saw in 2008. So he's basically using 2008 as an example. And that's a valid point. But I think what's wrong with that is 2025 and the gold role today is very, very different than 2008. The BIS has made gold a tier one asset. The IMF is talking about gold. It is not 2008. So when there is, or if there is an uh-oh moment in this otherwise immortal stock market, which is monetized by the Fed and money printing liquidity, if there is an uh-oh moment, it will not be like 2008. There won't be the US Treasury will not be the tier one safe haven lifeboat that it used to be in 2008. And the US dollar won't be. Again, for that whole string set of reasons we've just seen, the world doesn't trust the US 10-year. It doesn't trust the US dollar the way it did in 2008. So I don't see it the same way. You can't print gold. You can't create more of it when needed. You can't debase. It's literally indestructible. I mean, it's almost biblical in the sense that it was here before the universe was created. I saw Alistair MacLeod just a few weeks ago in England. I remember he was telling about this. I mean, it was literally there. It's literally there before we were here. And it has a limited supply. Unless a meteor comes from outer space and there's suddenly a massive oversupply of gold, it holds its value better than paper money. And because it can't be created at will or debased at will by politicians, sovereigns, monarchs, kings, democratically elected, or czars, it will always be a better store of value than a denarius or a paper money or anything that can be debased or devalued. And I think it has that kind of historical fixed supply. People could argue Bitcoin's the same way with its fixed supply, but gold is on the periodic table. It doesn't rely on electricity. It doesn't rely on hash protection. It doesn't rely on technology. It just sits there and does nothing, as Buffett says, but stare back at you. It's this pet rock. It's this historic relic. But no, it's far more than a pet rock or an historic relic. It's always been sound money for millennia. It goes way past ancient Rome. It goes back to the Persian first trading huts. It goes back to the Ming Dynasty. Whenever a sovereign, a monarch, a king, etc., gets itself into the back against the debt wall, the citizens and the powers that be will naturally lead towards something that holds its purchasing power, holds its value because of its fixed supply, its indestructibility. It's literally in our DNA. We have a small amount of gold in our bloodstream. There's something kind of supernatural about it, but it's honest. Unlike politicians, unlike policymakers, unlike treasury secretaries, unlike central bankers, gold just tells the truth. It does nothing but stare back at you and hold its value, while fiat money can be swapped, exchanged, debased, devalued, traded, exported, inflated, and all these things. It can be very busy losing its purchasing power, but gold just holds its value. And it's going up to these exponential levels only because fiat money, including the world reserve currency, is being debased at such exponential levels. So gold has almost a supernatural, historical, and inherent quality that's simply unmatched. And that's why it's in such demand, and it will always get the last laugh over dying fiat paper money. It just always does.
Financial strategist Matthew Piepenburg sheds light on why precious metals are more than just investments. They're protection against a collapsing fiat system. With gold becoming increasingly out of reach for many, silver stands as the people's metal, offering affordability and massive potential amid global shortages and rising demand. Unlike paper currencies, gold and silver can't be printed, inflated, or politically manipulated. They simply hold truth. In an era where trust in the dollar fades, these metals remain timeless, tangible stores of value that speak louder than policy promises. Let's get into the interview.
There's so much, I don't want to say clickbait. There's a lot of drama. There's a lot of sensationalism in the gold space for years. There's this pawn shop asset kind of reputation, and certainly there's all of us in our book, talking our book, biased about gold. But I want to get away from just being an executive in Zurich talking gold, because it's really not about gold. It's about fiat money. It's about the dollar. It's about the history of fiat money. And it's really theft, and it's not mistaken theft or stupid theft. It's deliberate policy theft when countries are in debt up to their ears and no longer have good options. And they take from the people, and that's not a desperate act. It's really a cyclical act. And to put that into perspective, again, it just needs get away from boring themes and boring economists and just stick to some real historical moments. And then that helps build, I think, a case of placing the headlines into context without getting bogged down in a lot of gross history. But I wrote a book in 2019 called Rigged to Fail. And it's a game, really, Wall Street, and what I've seen in it, what I've studied, what I practiced in it. And unless you are prepared for this rigged to fail game, unless you're informed, you're going to be on the losing side because the policymakers are not your friends. And that sounds sensational and maybe clickbaity, but it really is the debasement and devaluation of currency to monetize debt. That's open theft, but it's frog boiled. It's very slow, but it repeats itself over and over. When policymakers are at that Waterloo or Stalingrad moment where there's nothing left to do but debase the currency to monetize their debt, and they can continue this game slowly and frog boil it eventually, but eventually we feel it, and eventually the man on the street loses because Wall Street, as a metaphor, is very, very different set of values than Main Street, and there's a lot of dishonesty and cyclical natures of this. And what I see, I'll try to do this really quick so we can pull on all the other strings. But I see in historical patterns from honest economists that go back to the 1500s to the 1970s to today,
Yeah.
these patterns and then current headlines, objective facts that are really confirming what is fatal math for the US dollar. Because what we're seeing is a credit cycle ending, which is really a dollar cycle ending. And as that debt credit balloon approaches a popping moment, that doesn't mean a stock market popping moment, it means a credit debt moment. And when that pops, the currency used to monetize that debt is always debased and devalued, and it melts like an ice cube. And governments, through their deliberately debased fiat money, are really insulting their citizens in a very slow and deliberate but intentionally complex frog boil. So again, policymakers are not your friend. And the way to put this into some historical context, and I'll stop in 3 minutes and we'll pull on any string you want. But look, from the 1750s, from David Hume, we know one thing: debt always destroys currencies. And there was Sir Thomas Gresham from Gresham's Law in the 1500s in England, who said that trusted money, when it circulates at the same time as debased currency, eventually people will spend the bad and hoard the good. They'll figure out that the fiat money is bad and that hard assets like gold are good.
He reveals a sobering truth. The real story isn't just about gold or silver, but the deliberate devaluation of money itself. History shows that every time nations drown in debt, they quietly steal from their people through currency debasement. It's not a mistake, it's policy. From ancient empires to modern economies, fiat money always meets the same end: decline. While Wall Street thrives, Main Street pays the price. Protecting your wealth starts with understanding this cycle and preparing before it breaks again. If you value financial truth, like, share, and subscribe for more insight.